Existing home sales surge. NAR tells Congress make credit rules fair. And a second chance for people who lost their homes during the economic downturn. These stories and more on The Voice for Real Estate. Hi, I'm Stephen Gasquet with the National Association of Realtors. Some great news for the nation's housing markets. Existing home sales rose more than 6% in March. NAR's latest data shows the numbers are up year over year for the sixth consecutive month. NAR's chief economist, Lawrence Yun, explains why.
I think some of the activity is due to the delayed transaction from the winter months. So, snow weather, cold weather, there was some delays. So now those delays are beginning to show up. But also the fundamentals of improving economy and job creation, still amazingly low mortgage rates helping. And at the margin, I think the mortgage availability is improving at the margin slightly. The FHA premium insurance premium coming down. The FHFA, the regulator of Fannie and Freddie, trying to make every efforts to open up the credit box.
Later this week, NAR will be releasing its pending home sales index, which indicates future sales levels. And we're expecting some good news as warmer weather draws out more buyers. NAR President Chris Polychrone was in Washington last week telling lawmakers that credit remains out of reach for millions of credit-worthy households.
Since 2008, we've seen good intention but overcorrected policies severely hamper the ability of millions of qualified buyers to purchase a home. We have yet to strike the right balance between regulation and opportunity.
Testifying before the Senate Banking Committee, Polychrone said credit scoring criteria should be updated to include utility payments and rent payments so that young and minority households can establish a solid track record of on-time payments. That would open the door for more people to buy homes. Did you know that more than 9 million households lost their houses during the Great Recession? Well, it's been 7 years since the downturn hit, and already more than 1 million of those people are homeowners once again. That finding is based on research NAR released last week. Another 1.5 million households are expected to buy again in the next 5 years. However, for millions more, the road back to homeownership will be difficult unless lenders pull back on their overly cautious credit practices and return to more traditional standards that they used to use prior to the housing bubble. And as we said just a moment ago, credit scoring companies and lenders need to reflect the way financially responsible households use credit today. NAR's Ken Fears has more.
It really circles on the FICO score and the credit score and the impact that a delinquency has. And the fact is that it's not just the impact of the delinquency, but other factors that occur simultaneously, including delinquency on auto loans and credit cards. And on net, you could see a decline for a prime borrower by as much as 200 points in their credit score, a significant impact.
FICO, VantageScore, and others in the credit scoring business are already making changes to their ratings processes. And at a credit summit NAR hosted earlier this month, the company said more changes are on the way. But before those changes have an impact in the housing market, they will have to be adopted by Fannie Mae, Freddie Mac, FHA, and the nation's lenders. We'll keep on top of this story and keep you updated every step of the way. Do you work in a rural area? If so, you're probably familiar with the United States Department of Agriculture's Section 502 Single Family Housing Guaranteed Loan. For rural households, Section 502, administered by the Federal Rural Housing Service, is one of the bedrocks for financing home purchases. In most cases, lenders make the mortgage loans and the federal government guarantees them. But the Rural Housing Service also has a smaller program, which makes the loans directly to borrowers. It's used mostly for people who might not be able to get other financing without it. Kathy Glover, the director of that program, came to NAR's Washington offices last week to talk about how the two loan programs differ and who can benefit most from the direct loans.
The big difference is the income limitations. On the guarantee program, the income limits are a little bit higher, whereas they're much lower on the direct side. For example, the average 502 direct loan borrower has an income of around $30,000, and they are able to purchase a new or existing home with such low income.
NAR is working with the USDA on a frequently asked questions page to help you and consumers understand the program more. Look for that on Realtor.org soon. And that's our show for the week of April 27th. Real insights from your nation's realtors. You can get more information on everything we talked about today at the Voice for Real Estate page on Realtor.org. Thank you for joining us, and we hope you'll join us again next time as we bring you all the latest news on the Voice for Real Estate. Brought to you by the National Association of Realtors, your advocate for housing and property rights in Washington, across America, and in your neighborhood. This is the Voice for Real Estate.